Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit in Equities. In this video, we'll be talking about a small cap which has become the new darling of smart investors on Dalal Street. Please watch this video to know more. Also, this is not our own research. We will be providing the link to the source for this video in the description section. Now the company in question is Apollo Pipes Limited, which is available at Rs 418.65 and the face value for it is 10. The symbol for it is APOLLOPIPES. Now Apollo Pipes, which commenced its business in the year 2000, is a fast growing company manufacturing plastic pipes for various industrial, housing and agriculture applications. It has demonstrated continuous improvement in the profitability and return ratios led by operational efficiencies and strategic efforts that isolate it from the highly commoditized market. Moreover, with prudent management of its balance sheet, it qualifies most of the hygiene factors for a good investment. What is interesting, post close to 45% correction in its share price, stock at current market price has become relatively cheaper. It is currently trading at 15 times its FY19 estimated earnings. Apparently, on a PEG ratio, stock is trading at 0.4 times because of its expected earnings growth of about 40 to 45% over the next 2 years. Now, if you keenly follow where the smart money gets deployed, you would not have missed Apollo Pipes because investors such as Bhansali family, Mukul Agrawal, Kotak Smallcap, IDFC and few others already find their names in the shareholder list. Very recently, Malabar India Fund, an investment boutique run on value investing philosophy, has picked up a 2.59% stake at about Rs 400 per share. Besides this, Rohit Rajgopal Dhoot is also an investor. Looking at the financials, the company is a small cap with a market capitalization of 501.73 crores. The EPS of 24.86 translates into a very cheap price to earnings ratio of 16.84 when compared with the industry PE of 46.04. The price to book ratio of 4.39 is, however, a bit on the high side. The company's debt to equity is also high at 1.9673, whereas the return on equity for this company is a very strong number at 0.2668. The promoter holding here is 42.14%. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to our channel, please consider doing so.